Hello, everyone. How are you all today? Okay, so just some background about what we do. So EFINA, the full meaning of EFINA is enhancing financial innovation and access, which essentially is, tech, new ideas. I'm going to give you, before I go, I'm going to give you some figures and see if you guys can guess for me. So, wild guess, in the millions, what do you think Nigeria's adult population is 18 and above? 90 million? 100 million? 110 million? Wild guess. 90? 110? Okay, so our population is 99.6 million. Now, of this adult population, how many do you think are based in rural areas? I'll give you some percentages or some figures. 60 million. 60 million of the 99 million based in rural areas. 70 million or 80 million? 60 million. Okay, so it's 63.1 million Nigerians. Adult Nigerians live in rural areas. How many do you think, what do you think the male-female split is? So how many women, I'll give you some percentages, 50%, 60%, 40%. 50.1% of the adult population are women. So just the last figure, what percentage do you think of the adult population, I know Sam may have mentioned it earlier, what percentage do you think are 35 and younger? Percentage, 50, 60, 70, 80? 70. Okay, so 56.9%, 56.7 million Nigerians between the ages of, between 18 and 35. So that is one of the things which EFINA does. We are what you call a financial sector development company. What we do is we make the financial sector work better for the poor. Right? So it's also called access to finance. And some of you may have heard of the term financial inclusion. Right? So that's what we do. We're the pioneers of financial inclusion in Nigeria. We are funded by DFID, which is the UK government development aid, and the Melinda Gates, the Bill and Melinda Gates Foundation. So we have 4 pillars or 4 ways in which we work. Research is one of those ways, and this data I'm giving to you, this is data that we produce. We have a flagship survey, which we do every 2 years. We map the access to finance in Nigeria for all Nigerians, all adult Nigerians. So we can tell you how many people have access, how many people have bank accounts, how many people have savings, how many people save. We can tell you how many people have access to credit, what sort of credit. We can tell you pretty much, what access to finance is like for different kinds of people. I can tell you, for instance, that 68% of people that have mobile phones have access to finance. So that tells us that mobile phones are an enabler. I can tell you that more people in the urban areas have access to finance. I'm sure that one you will know that's true. I can tell you the difficulties in bringing finance close to people, the costs involved, the other issues around infrastructure. And we can tell you what we need to do to change this, right? So the first pillar is research. The other way in which we work is advocacy. So once we produce the data, once we know where the problems are, we now go and advocate on behalf of what we call the poor, but really just those at the bottom of the pyramid. So we work with the regulators, with the central bank, with the NICOM, the National Regulator for Insurance, work with pensions. For instance, in the last couple of years, we were instrumental in guidelines that they released for what they call micro-insurance and micro-pensions, which are products that are targeted at poor people, right? The third way in which we work is what we call our innovation fund, right? So what we do is that we identify people with good ideas and we support them. We support them financially. We support them by giving them advice, giving them business support. We just launched a new fund, which we call the FinTech Fund, which is targeted specifically at fintechs. Now, being tech people, I'm sure you all know what a fintech is. Anybody here that has not heard the word fintech before? So our recent fund was a £2 million fund. We've just finished the funding rounds, and we gave monies to about 6 different companies, from startups to established companies. Some of the companies that we gave. So because what we do is to encourage financial inclusion, we want to support fintechs that are in the business of formalizing or bringing people into what we call the formal space. For instance, we're supporting fintechs that support cooperatives. I know that cooperatives are informal. You have your local sort of agile sort of things that go on. So we are supporting fintechs that provide an infrastructure, a digital infrastructure by which people can access on their mobile phones. Right? Now, another part of our pillar is digital financial services, which also ties into fintechs as well. So our belief is that the way forward is through innovation. And if you have a good idea, innovative idea, a tech idea, that you can prove, that you can support, then we'll review it and we'll try and support you. So in terms of what sort of businesses you should be looking at if you're in the tech or fintech space, what we prefer is to see are people that are bringing technology to support a use case, what we call a use case. So if your technology is to support something which is already happening, right? For instance, if you're going to support, for instance, people that are already saving through informal means, people that are already shopping, people that are already, just any use case that is happening already. We shy away from supporting tech just for the sake of it. So you might have a very good idea which is not going to work, but if you can show that this idea is going to make things easier for people that are already performing this activity. Right? So when you're looking at what to do, what to put your money in, look at how to make things better for people, how to solve problems. So you have to be in the problem-solving game. And if you can solve enough problems, I think you do very well. Right? So I think for now that is all I want to say. I hope that I have been able to explain what we do and explain in some way what the market is. So thank you very much. When we started our journey about 10 years ago, very few people even knew what financial inclusion was, including people in government. And those who knew about it didn't really know what to do. So it wasn't until we came out with what we call the Access to Finance Survey. Because what this survey does is that it looks at the whole country and it tells you, it gives you figures as to who has access to finance based on different parts of the country. I can tell you now that the places with the highest access to finance are in the south, those with the lowest are in the north. Right? So which is why data is very important. With data, you can formulate policy. So in answer to your question, there's an ecosystem, and everybody in that ecosystem is important. The regulator is important, the financial service providers are important, the merchants are important, the people doing agents are important, and so is the customer. And we all have to work together. So in terms of who can drive it the quickest, you would have to say government, because they come out with regulations, and so many times regulations are actually the biggest obstacle, right? One of the things that we're debating now is the KYC, which is the know your customer. Before you can open a bank account, you have to go and bring all kinds of things. Bring bill, bring proof of address. A lot of people in rural areas don't have those things, right? Why are women more excluded than men? Because a lot of women don't have, particularly in the rural areas where the man is the one that is usually has the financial control. Women don't have any sort of bills in their name. They don't pay NEPA bill. They don't have any. So when you ask a woman in a remote area to open a bank account, it's almost impossible for her because she doesn't have the documents that you need, right? So these are the sort of things that we're working with government to address. And based on some of our work, government introduced what they call the tiered KYC, depending on what sort of accounts you have. So in some cases now, you can open an account without all those documents. So to answer your questions specifically, everybody in that ecosystem is important.
To support fintech startups in reducing barriers to entry by regulatory institutions.
So, EFINA is currently engaged working with the CBN on what they call a regulatory sandbox. Right? So, I don't know if anybody here has heard of the expression sandbox. So, a sandbox is a way in which it gives you the opportunity to live test. Right? So the biggest issue with the regulator is risk, right? So it doesn't know if he allows this fintech to come into the market, doesn't know what's going to happen, right? You've heard of some of those financial scams. I think last year was it MMM or somebody? Who was it last year? So in terms of anything finance, the regulator is extremely risk adverse. Does not want to encourage, because if something goes wrong, if you go and put money in a fintech, or if you go and save with a fintech, and the fintech goes down, people will lose confidence in the financial market. So it is the regulator's job to protect the market. So what we're working on is a system by which we can test some of these ideas, some of these products. We can live test them, roll them out, and once it is shown that, you know, there are no risks, then they will be licensed. Right? So that's what we're doing now. So I think that's the most important thing we're doing. There are also fintechs who are not under the regulatory powers of some of these regulators. In fact, quite a few of the fintechs out there are not licensed. So you can start. You can start. Start and let the regulation catch up.
Must the fintech company have a link to the bank or a bank account before a fintech can invest?
If you're not linked to the bank, how will you operate? Right. So the most efficient or the easiest fintechs to support are those that are providing banking services to banks. So if you have a good product and you can secure bank partnerships or patronage, it's easier to support you.
Thank you so